Hi, good evening. If you can see me and you can hear me loud and clear, please type yes in the chat box right now. Okay, cool. So all of you can see me and hear me. So good evening. My name is Victor, and of course there's some confusion over there because while you're waiting, they say that Rusmi is going to present. So no, Rusmi is not going to present. I'm going to present today. So my name is Victor, and this is one thing I'm going to talk about. Next thing I'm going to talk about is I want to thank all of you for attending this webinar. And of course, recently, if you have followed the fifth person, recently we have won the GoTo.com award from SGX. They recognize us as one of the best investment website related website in Singapore. So we could not have get this award without the support of you guys. So thank you so much. Okay. So as usual, this is our once a month webinar, and today I'm going to talk about how do you read the prospectus. So how this whole webinar will go about is that I'll be doing some presentation, and I also will be using one company prospectus as an example to teach you guys and what you should actually look at. Okay. And after the whole presentation, right, we're going to go for a Q&A. So in between, if you have any question, right, please type in the chat box, okay, and we can answer the question from there. Okay. So now I'm going to share with you my screen, and I'm going to do it now. Give me a minute. Okay, if you can see my screen right now, I want you to type yes in the chat box. Can you see my screen? If you can see my screen, okay, cool. Okay, cool. So now we can start with the webinar. Okay. So today we're going to talk about what to read in the prospectus. So of course, when the prospectus come, the prospectus is very, very thick, and not everything you should read. There's a lot of information. So I'm going to tell you what you should focus at. Okay. And our usual disclaimer, whatever I'm going to share with you today is not a recommendation to buy or sell. Okay, it's for educational purpose. So basically today's topics will come in 2 points. First point is I'm going to teach you where to find the IPO prospectus, and secondly, I'm going to tell you what to read in the IPO prospectus. So let's move on to where to find the IPO prospectus. So basically, there's two places that you can find the IPO prospectus. Firstly is the MAS, another one is the SGX. So right now I'm going to just swap over to the my Google, okay, my Google Chrome. Can you see the Google Chrome? Type yes in the chat box if you can see the Google Chrome. Okay, cool. Okay, so what you need to do is you basically just type MAS Opera, this word, special word, MAS Opera. So you click on MAS Opera. So you can see down there, this part is the MAS Opera. So you just click on it, okay? And when company, usually when the IPO is under this segment, offer of shares. So you click on it. So you come to here. So you can see the latest IPO. What's the latest IPO for SGX? Is actually this company called Kofu. You can see from there. So you can see Kofu's prospectus is right over here. Okay, so you just click on Kofu. Okay, and you can download the prospectus from here, just right here only. Okay, another place you can find the prospectus is you go to sgx.com. So you go sgx.com and you go company information, and there's this thing called prospectus. So let's say if you are looking for, let's say, Protnets, so you just type Protnets. Protnets. Okay, wait. Let's see, PROP. Okay, let me search for it first. Okay, can you search for the type? Okay, prospectus. So these are all the prospectus. Then I just type Protnets. How come? Let me see. There's some issue with SGX today. Give me a minute, huh? Okay, now you just Google SGX prospectus. You got IPO prospectus. Okay, just right over here. So basically, you just Google SGX prospectus. You'll come to this page. So let's say See, Prospectus over here. So once you choose that, this is the prospectus. You can get it from there. Okay, you just click on it, and here you go. That's the prospectus. So these are the two places that you can get the prospectus. Just take note that when the company launch a prospectus, right, usually it will come out on the MAS Opera first before it comes out to SGX. So if you want to faster get access to the prospectus, right, you have to go to MAS Opera. So that's the best place you can get it. So if I were you, I'll just go direct to MAS Opera. No need to go to SGX, because by the time you wait for SGX to put out a prospectus, it's probably a few days later. But if you want to be fast, you just go MAS Opera. Okay. So so this done. Let's go back to the slides. Okay, so now you know where do you get the prospectus from, the MS Opera or the SGX. So the next thing is you must learn what to read in the prospectus. Okay, so basically I already break down the 7 points that you're supposed to read, the 7-step process. So firstly, you must read the summary of IPO. Then you must understand the use of proceed. What kind of proceed? When the proceed they raise, right, what they're going to use for. Okay, which I'm going to talk about later. We're going to understand their business, their management, their financial, and the valuation. So when they IPO, right, is it a reasonable price or is it a very high price? Okay, and usually when a company IPO, right, they have this industry report where they already paid an independent research player to research their industry and their competitor. So these reports are usually very in-depth report. If you want to understand very well about the company, you should read the industry report. So basically, when I read the prospectus, right, there's two things that you can get out of it. Okay, firstly, right, if you invest, if you are just investing for IPO, right, then you have to read the prospectus. Secondly, if you want to understand more in depth of the business, right, the prospectus always provides very in-depth research about the business itself. Okay, for personally, I haven't invested in any IPO before, but every time when the company IPO, I will look at the prospectus and I will see how can I understand about company. I want to understand even deeper, so I'll read the whole prospectus, and from there I will track the company for the next 3 to 5 years and see how it performed and how the company, right, actually follows what they planned in the prospectus and how they're moving. So that's how I usually track them. Of course, there's case-by-case basis, like companies like maybe Facebook, where they IPO at very high PE, but because the company's growth prospects and the business are very good, so the company continue to compound even higher price. Okay, so there's some IPO can buy, but some IPO cannot buy. If you want to buy an IPO and you want to make money, you have to buy in those IPO that you know the business is very good, okay, and their growth prospect is very good. So these two is very important. So we're going to talk about it in the business segment. Okay, so now firstly we're going to talk about the summary of IPO. So what you're going to look at in the summary of IPO. So basically these are some of the points that you're supposed to look at. The summary of the business, which I later going to show you live how you're going to look at it. What is the issue price and the number of shares that they're going to issue to raise the amount, the total amount raised, and what's the market capitalization when they IPO. Okay, so let me move to this, use Prospectus as an example. Okay, so this is the IPO prospectus of Prospectus. So every time when I look at this IPO, right, the first thing you must look at is the number of shares that they want to IPO. So basically is they're going to raise about 42.5 million. Okay, this is the placement, but this one is also a bit excluding the vendor shares. Okay, so there's also vendor shares inside. So to get more in depth of all these actual shares, right, for this part I'm going to talk about the amount they raised, they're going to use inside the company. The vendor shares are going to talk under the management segment. Okay, so you know that the price they want to IPO is at 65 cents. Okay, so when I scroll down IPOs, the prospectus, right, the first few pages, right, you have to read because it gives you a snippet or the summary of the whole business, which is very important. Okay, it summarizes everything right here. So actually I would say the first few pages will explain to you everything about the business. when you go into a detailed business, right, they're also repeating the same thing. Just that if you want to find more fine detail about the business, right, then you have to go read the detail of the business, which I'll encourage you later when I talk about it. But if you want to get a quick summary, right, basically the first few pages already summarize almost everything for you already. Okay, so if you can see from here, you know, like they tell you that Prognex is like 7,248 agent, then which region they are in, what their market shares, competitive advantage, all right here. Okay, next is you must go to this page called the table of content. So under this table of content, right, this is where you will decide where you want to go and see your information. Okay, so let's say if I want to find the companies, let's say the amount raised and the share issue price, which you found on top, and the amount raised, right, you want to go to this thing called the over here. Let me show you. Where is it? Offering statistic. Give me a minute, huh? You want to go to this thing called offering statistic. So for the first part of the summary IPO, you need to go to this offering statistic. So I already bookmarked this place. So it's at around this page. So this is the offering statistic. So you know they're going to offer 65 cents. And this is the earnings per share. So the IPO P is about 12.3 times, which you can see from here, or 12.6 times. So there's a slight dilution if it overloaded. Okay. The next thing is you want to see what's their market cap. So you know that Prognex want to IPO at 240.5 million market cap. So if you look at the number of shares they have after IPO is about 370 million. Okay, 370 million, and before IPO is about 307.1. So you minus 370 minus 307.1, right? You get about 62.9 million share. Then you multiply by the 65 cent, right? You know they will raise roughly, right, 40.9 million into the company, which is into the Prognex, the Lisco company. Okay, so these are some of the information that you want to get. Okay, so now let me move back to the slides. Okay, so through what you see just now, right, you can understand that Prognex IPO price is 65 cents, the summary IPO. They're going to amount raised about 40.9 million, which is exclude vendor shares. That means the management itself, they want to sell off the shares to the public, and that the money, the shares that they sell off, right, the money won't go into the company, but will go into their pockets. Then post IPO shares about 370 million, and their market cap is about 240.5 million. So these are the information that you must get first when you look at the IPO prospectus. Okay, next is we move to this thing called the use of proceed. Okay, so basically what is this thing means that when they IPO, right, they get the cash, right, what are they going to use this cash for? What are their plans? Okay, so that is something that you must find out. Okay, so for me, right, I look for two things. Okay, so basically you want to look for the proceed, right? Are they using it for growth, or are they using it for debt repayment? Okay, so personally to me, right, when a company IPO, right, because they want to grow the company, that's why they IPO. But if the company IPO just because they want to pay off the debts, then that is an issue. Why? Because when a company IPO, they usually IPO at a high valuation. It's okay to IPO at a high valuation if the company's growth prospect is very good. That means the company continue to grow very fast. So even though you pay at a high price, right, eventually, right, you still make a lot of money from that. But if the company IPO just to pay off the debts, and you already pay at a high price, your chances of not making a lot of money from that is very, very high. Okay, so remember, it's positive for company, right, to IPO because of growth, not debt repayment. So I want to look at the use of proceeds, right? How many percent is used for debt repayment? How many percent is used for growing the business itself? Okay, so let us go back to Prognex case. Okay, so you go back to the table of content again. So you have to always refer back to the table of content, which is here. So they tell you that the use of proceed is right over here. you can see the use of proceed and offering expense. So you know must go to page 28. So of course I bookmark the place. So you can see that the total amount they raised, which I told you just now, is about 40.9 million. But of course, when they IPO, they have to pay some expense, which is over here. So you after deducting, right, the net proceed will be 38 million. Okay, so they're going to use 12 million to do merger and acquisition. Then they're going to use 8 million to enhance the brokerage business, which is going to make the company grow. Okay, they're going to expand their service using the 7 million, and they need to enhance the technology. And the other 5 million is for working capital purpose. So from what I see here, right, there's no debt repayment, so it's okay for Prospectus, because basically they IPO they want to grow the business itself. Okay, so if you go back to the slides, so this is what you saw just now. So out of them, you know that 100% of the profit is used for growth. Okay, if you tell me 100% of the profit is used for debt repayment, then I'm very, very careful with this company. I probably won't invest in that company. And usually, of course, like I said, their valuation very high, so I won't want to look into them. I'll maybe, if I want to buy into them, I'll make sure that they drop to a very cheap price. Okay, so next is, after you understand about the summary of the IPO, the use of proceed, the next thing is you need to understand about the business itself. Okay, so what you're trying to extract out of this is that you want to find out the business model. How is this company actually making money? Okay, you need to find out what type of business they have, what are the business segment they have. Next is you need to find the risk factor that will harm the business. When I say the risk factor that will harm the business, is the risk that will cause the business profit to drop, or even do a structure change to the whole business itself. So that means the moment this thing happen, right, the whole business dynamic change already. So just take note about it. So you need to find the main risk. Okay, next is, of course, you need to find the prospect, the business strategy, and the plan. Okay, like I said, you need to buy with companies with good business, with very good prospect, because you are paying usually, okay, most of the time you are paying a very high price for IPO, unless you tell me you buy IPO stock during the bad time. Then usually the time of the valuation is very low. Most of the time, companies on IPO is always during good time one. So just take note about it. So let me go to the content again. So you have to always refer back to the table of content and keep flipping your pages. So then you go step by step to find the information. So basically, if you have not enough time, right, then you just need to read this overview of our group. So basically, this gives you the overview of the business itself in 2 pages. Okay, but personally, I felt that if you want to understand the business itself, right, you have to read the detailed one. That means you go very in depth to understand the business. So usually it's under this segment, which is called our business. Okay, but if you have no time, then you read the overview of our business. But you don't need to read both, because whatever the overview of the group have, right, our business also have it. So you don't double read it. You just go the main one. Okay, so usually what I do is I just straight away go to this page 91, our business, and I start reading about the business and understand, okay, what kind of business they are, what segment they have, and all this. Okay, so let us move on to the business itself, which is like the page 91. Okay, so let me see. Okay, so I'm here. So basically, you will read all this like overview. Okay, so from here I can see that Prospectus is in the real estate business. Okay, and they also tell you they are the largest agency in Singapore with this amount of market share. So the informations are all down there. So they got other business segment, which is training. They need to train their agents, and they also got property management, which they manage some condominiums. Then they also got real estate consultancy. Okay, usually I like to read the history and development, how actually Prospectus started from the day they start all the way, and how do they grow until now. So this is a very interesting thing to read about the history of the business. So usually I'll read this segment. Okay, so these are all the different services, real estate brokerage. They go more in depth. Okay, then they got project marketing sales. So basically, when they say project marketing sales, right, the top one, right, the real estate brokerage is basically they do buy and sell for resale houses. That means second-hand home. Okay, project marketing sales are usually for those new houses. That means new launches. That means the developers start to want to launch their house before the house even built. They want to launch it and they want to collect money. So usually the agents are at this type of showroom trying to market the business and get people to buy. Okay, so this is called project marketing sales. So these are some of the projects that they have done last time. Okay, so from here you can just read all the way until page until the end. There's many page, so you can understand in depth about how's their commission structure, which you can see from here, which is very important for them. They are shared between 70 to 90%. So that means the agent itself will get 70% of the commission, and the company will get 30%. To the ratio of 90%, the agent get the commission and the company get 10%. So this is the range that the agent going to get for the commission structure. So this is one thing that you also must know. Then also the agent itself, usually they have a team leader, team manager, and this team leader, team manager will get a overriding commission. That means they'll get a percentage of the commission on top of that. Okay, so these are some of the places that you can read. So do read this segment. It's very important if you want to understand the business and all this. Okay, next is you want to understand the risk of Protnex. Okay, so where do you look for risk? So you go back to bookmark, table of content. So when you go to the table of content, okay, you look for this thing, risk. Okay, can you see here, risk factor? So you know you must go to page 35 to read about the possible risk. Okay, every business have a risk, just that you must know which risk, right, will affect the business greatly. That's the important thing. Okay, and because that when that thing happen, right, you have to take note about the business. Okay, but some risks that they stated here may be some minor risks. Actually, it doesn't matter one. The important thing is to look at the main risk. Okay, so it's at page 35. So let me go to page 35. Okay, so one of the risks is that you can see from here, we are dependent on the Singapore property markets and exposed to its market forces. Okay, so this is definitely one of the main risks that will affect the whole business of Protnex. So you must take note of this risk. Okay, so for example, recently, right, the government actually came out a cooling measure to cool the property market. Do you think that it will affect Protnex business? Type yes if you think that the company will this cooling measure will affect Protnex business, and type no if you think that it will not affect. Okay, so type yes or no in the chat box right now. Okay, cool. So most of you knows that the recent measures will definitely affect the business in Protnex. So if okay, I'm an investor right now. If I were to look at Protnex, right, yes, there's opportunity because they are being harmed by the cooling measure. But of course, you have to wait for the right time to go in. So the right valuation is very important. And because you are investing in Protnex, such a business, which is an agency business, right, they tend to be very cyclical in the nature. So you need to know how to time to buy at the close to the bottom of the cycle so that you can prevent your losses. Okay, so right now when the cooling measure just happened, right, I probably wouldn't want to invest in Protnex. Why? Because there's a lagging effect. So when the cooling measure happens, right, you will expect that the next few quarters or the next few years of their earnings, right, may be affected. So I may not want to invest in Protnex right now. Okay, so I wait until their price continue to drop and being affected by the drop in earnings until a decent price that I feel there's value and I buffer enough, then I'll look at this company. Okay, so this is one main risk of Protnex that you need to take note. Okay, so let's say for instance, they are dependent on availability of mortgage financing. Yes, so but of course all this is all based on government regulation. So you must take note about property business, property agency business. They are highly being affected by the government regulation. So if you want to invest in any property counters or any property agency, you have to be very well informed of the property news in Singapore. So take note about it. Okay, so you can see that they are subjected to government policy and all this. What other things are? They may be liable sanctioned by CA, which is their organization that sanctioned the agency, and if they fail to comply with the law and regulation. Okay, so basically the CA can take away their license. Okay, but I'll tell you, right, the chances is very unlikely one. Usually people in the business, right, they are very, very careful about it, or they may fail to successfully renew their real estate agency license. Okay, actually this is all the plans that they tell you, but I tell you, the chances of these two things to happen, right, is very slim. So to me, right, these two, right, doesn't affect the business, but of course if it happens you must really take note. Okay, but the one that I feel that the high probability one is the government itself, the rules, and also the property cycles that will affect them. So just take note about all this. Okay, so they have many risks over here, so you have to go and gauge yourself which is the possible risk on this. Okay, so looking at all these risks, of course, I got a clear understanding of Prognex itself, because I have friends who are in Prognex, so I asked them about it. So I also come up with some risk that is not inside this prospectus. Okay, I'm going to share with you right now. Okay, oh sorry, we still left with the prospect and business strategy. Okay, so where do you look for prospect and business strategy? So basically you go to the table of content again. Okay, so you have to always refer back and forth the table content, so you can get the information very fast. Okay, so you need to go this thing called prospect, business strategy and plans. So they're going to talk about how they're going to grow the business, which is very important. Okay, so it's page 127. Okay, it's right here. So they say that from this page they tell you that the private residential property transaction is increasing, is expected to increase lah. Okay, so on 2012 to 2014 the thing have been decreased, then it start to pick up until 2017, and 2018, 19, 20, 21, 22 it will continue to increase. Okay, but of course this is based on the part where 2014 the government, there's a regulation, that's why the thing dropped, and after that the market pick up in 2017, and this year the government actually announced the cooling measure. So sometimes this kind of figure you just take a pinch of salt, because you can expect that maybe 2019-20, right, 2020, right, you're going to go down because of the cooling measure. The government is cooling the thing. Okay, so you must know that real estate don't always go up, they goes in cycles. Okay, so a lot of people when they buy into property, they always expect that the property price will keep increasing. It's not like this one. The property is a cyclical in nature, so you must know how to buy at the right time. Okay, so sometimes this kind of independent research also may be wrong, because you see they did this thing before the government cooling measure, and they expect that the property will continue to increase in transaction value, but with the recent cooling measure happening, right, I don't think this graph, right, will actually present itself correctly. Okay, so just take note about it. Okay, so these are some of their growth prospect when they're talking about that time. So I'm very careful when I read all this, because sometimes when people IPO, right, they always want to sell you very good dreams, very good prospect. That's why they IPO. So you also have to take things with pinch of salt and see how they actually grow their business. Okay, so if you can see, they're going to enhance their competitive operation through their real estate business. They're going to do local and regional expansion. So basically they want to acquire or license out their thing. So from all this, right, expansion of our range of business, I think the really one that can bring up their revenue or bring up their profit is they actually mainly come from buying their competitors. Okay, how much can you make from just expanding your services? Not much, right? So actually the main thing, right, is actually buying their competitor. So I'm going to see how are they actually going to acquire more competitors and make them even bigger. Okay, so this is one thing that you should take a look. So this is the only growth prospect that I feel that is strong in for Prognex. Other than that, there are other growth prospect I feel that is quite minor, I would say. Okay, not much of a growth also, but of course their valuation when the IPO is, I would say, decent, not say very expensive. Okay, so now with that, I've talked to you about the business model, the risk, the prospect. So let me summarize what we just talked just now. Okay, so if you go to the business model, you can find all this information. Okay, so basically The number of agents that Pronex have is about 6,684, and in terms of Singapore residential market, they got 42.7% market share. HDB resale market, they got 45.3% market share. For the private leasing, they got about 23% market share. So basically, they are the market leader in the agency. Okay, so this is what they're trying to tell you, and all this information you can get it from the business segment or even at the summary of the IPO. Okay, so this is one thing that I want to talk about, because in case you want to read more in depth, you can just go to fifthperson.com. Fifthperson.com. Fifthperson, you type Pronex. I written a thing about 4 quick things that you need to know before you invest in Pronex IPO. So I found some useful information which I think that you can help you. So firstly is that you know that every property agency, right, they have a team inside, and always there's a team, right, that will be the strongest team. Okay, so for Pronex, right, their strongest team, right, is called this company is this team called Powerful Negotiator. Okay, so what I do is this information is not inside the prospectus. I have to go dig out even deeper outside of the prospectus. So the prospectus is one way that you're supposed to dig the information. Secondly, from the prospectus, you must think of ways that what information the prospectus thing shows you. So you have to go find out. Okay, so what I found is that, okay, Pronex, let's say for instance 2017, their total brokerage income, right, is 355.8 million, and out of the 355.8 million, right, 218 million, right, come from Powerful Negotiator, which is one team itself. Okay, so that one team itself, which is a very huge team, which is the largest team in Pronex, right, accounts 61.3% of the total revenue. Okay, and you know about property agency is that when the main team leader leave, right, the company to another agency, they usually pull all their agents to another agency. Okay, so this is one risk that every agency have. So if you look at Pronex, right, their largest team is Powerful Negotiator, and the person running Powerful Negotiator is this guy called Kelvin Fong. Okay, which later we're going to talk about him under the management segment. Okay, so it's 61.3%. So this is one main risk that Pronex have. Okay, so I'm very concerned about this. So if this Kelvin Fong guy decided to leave Pronex, then it's going to be a very, very big issue for the whole 61.3% of the total revenue going to disappear from Pronex. So just take note about this risk. But of course, the management itself also know this risk, and they already mitigate this risk, which later I'm going to talk to you under the management segment. Okay. So now we are back in the management segment. Okay. Okay, give me a minute. Okay, so now we're going to talk about the management. So under the management, what you need to find out is that you need to find out who's the management and the shareholder. Okay, who is actually managing a company and who owns the company. So this is one thing you must find out. Second, you need to look at interested party transaction. Okay, that means, do the listco deal with private business that the shareholder also, the major shareholder also own. Okay, so this is a big thing that you need to find out. Okay, so usually under the segment, you will find out the interested party transaction. Okay, so let me go to Pronex again. So let me go to the table of content, and we look for the management. Okay, so if you look at the management, which is under right over here, so you can see director, management and staff. So it's page 140. So you go to page 140. Okay, you can see over here. So basically the 3 main management, right, is actually the CEO Muhammad Ismail, executive director Alan Lim, and the executive director Kelvin Fong. Okay, so you remember just now I talked about the Powerful Negotiator, the one of the biggest team in Pronex is run by this guy called Kelvin Fong, which is over here as an executive director. So basically what happened is that the CEO Ismail is very smart. He knows that if Kelvin Fong were to leave the company, the whole Pronex sales were going to be affected. So what he do is he make Kelvin Fong the executive director, and he also give him shares. So basically these guys also own part of the ownership in Prognets. Okay, so later you're going to see how much percentage that he actually owned. So these are the place where you can look at the management itself. You can understand a bit of management. So usually I just want to find out who's the management. I don't read that more in depth. The next thing is I want to look at their shareholding structure. Okay, so if you want to look at the shareholding structure, you have to go to right over here, which is, let me see, over here, shareholders. Okay, so it's page 84. So you can go to page 84. Okay, right here, and you can see this is the shareholding structure. So you can see from here, right, Muhammad, Ismail, Alan, and Kelvin Fong. So before the IPO, right, each one of them owns about, they also got owns, for Ismail and Alan, right, they basically owns the corporate companies that owns Prognets itself. So the corporate company owns Prognets 68%. Kelvin Fong owns 10% of Prognets. Okay, before IPO. So if you look at the number here, so Ismail actually owns 62% of P&N, which the company that they own Prognets through deemed interest, and Alan Lim owns 38% of P&N. Okay, which is over here. Okay, so you can see that after IPO, right, Ismail actually owned 55.6% of Prognets, and Alan Lim also owns 55.6% because they owns under a shareholding of a company. Okay, so Kelvin Fong basically after IPO, he owns 7.3% of Prognets. So basically that's a big amount. So if 7.3% of the 240 million, that's a huge amount for him itself. Okay, so basically based on what Ismail just do that, there's very low chance that Kelvin Fong will leave Prognets and bring his whole team. So don't worry about that. The management already solved the issue. But of course, I point it out because I want people to know that there's such risk over there, and it may happen. It may or may not happen, but there's also chances that it will happen. So you have to take note about it. So if ever the day that this thing happen, right, I won't want to hold into Prognets because I know they're going to get a huge drop in terms of revenue and profit. So take note about that. Okay, so next is, after you know who's the management, you know who's the shareholder, next is you want to look for vendor shares. Okay, so how do you look for vendor share is, usually you just scroll it down, right, it's over here, or you can go to a table of content to look at vendor shares that you have, but it's just right the next page. So you can see vendor shares. So what you mean by vendor shares is when the management sold the shares, right? Okay, so most of the time companies IPO, when they sell the shares, right, the money that they raise, right, will go into the company, the IPO company. Okay, but when people talk about vendor share is when the management sell the shares, right, the money don't go into the company, but the money goes into the management pocket. So that means they sell the shares to you. Okay, why do you want to look at vendor share is you want to look whether the company, right, the management, right, when they IPO the company, are they IPO to want to grow the business, or they IPO because they want to cash out the business? Okay, so there's these two things. Either they grow for a business or they cash out. So a lot of the Asian management, right, they usually want to cash out their business. So you must be very careful what kind of company you are investing in. Okay, so be careful of that. Okay, so from here you can see that each of P&N, which is the corporate company that Ismail and Alan own, this one is Mr. Nizamuddin Ghaffar. This one is Ismail brother, Alan Lim and Kelvin Fong. So they are selling this amount of shares. Okay, so basically the among all these four people, right, Alan sold the most shares at 23 million shares. So you must take note about it. Okay, but of course I'm going to teach you how do you look at it. Okay, so these are some of the information that you want to look at. So this vendor shares information, later I'll summarize it for you. The next thing is you want to look at the interested party transaction, which I talk about. So which is over here. Okay, which is under 180, page 180. Okay. So if you go to interested party transaction, so you want to see what are the interested parties. So basically there's this Chng Capital that the Ismail and Alan owned. So this Chng Capital is called do business with Prognets itself, or Chng Builder and the Zest Academy. Okay, the important thing is to look whether all these business that deal with Prognets itself, right, they can affect the revenue and profit by a huge amount. Okay, so for Prospectus, when I look at it, generally the amount is not so huge, just a few million or a few 100,000, very small amount only. Okay, so it's not much. They don't have much of a conflict of interest in this segment, so don't worry about that. Okay, so let me go back to the slides. So basically, from just now, what I show you, this is the three management: Alan Lim, Muhammad Ismail, and Kelvin Fong, which is the founder of the Powerful Negotiator. Okay, and Ismail and Alan actually co-own 55.6% of the whole Prospectus, and Kelvin Fong owns 7.3% of the whole Prospectus after IPO. And out of these three management, right, Alan Lim sold the most vendor share at $15 million. Okay, so Ismail sold about 1.9, and Kelvin Fong sold about 1.9 million. So very small amount, but the highest amount is Alan Lim. So what you want to do is you want to compare the total amount of vendor share that they sold, right, over the total amount of money they raised plus the vendor share. Okay, so the total amount of money they raised is about 40.9 million. And if you include the vendor shares amount, right, the total amount they raised from the IPO is actually 60.1 million. So out of the 60.1 million, right, if you see the vendor shares only account 32%, so it's quite decent. And based on the market cap, it accounts about 6.2% of the total market cap. So quite a small amount, I would say, not much of a big amount. So still okay. So at least I know that when they IPO, they never exit totally. Okay, so what you really worry is that management, when they IPO, right, they just want to cash out and they just leave the list go down there and they just milk from the minority shareholder. So this one thing that you must be very careful. So let me show you another company called Union Gas. Okay, which the founder also sold vendor shares, which you can see from here. It sold about 30 million shares, which they IPO about 0.25 cents. So the founder actually sell about $7.5 million shares, okay, worth of shares. Okay, and out of the 7.5 million, the total proceed that they raised is about 15 million. So out of the whole 15 million, right, 7.5 million, right, will goes into the founder's pocket. So 50% of the profit, and their market cap is about 50 million. So it's 15% of their market cap itself. So this one seems slightly a bit higher itself, I would say. More like the management like cashing out or leaving the list go up there and all this. Okay, so you must take note about it. Next is I also want to talk about the interested party transaction of this Union Gas. If you look at Union Gas and if you study the interested person transaction, you realize that they got this company called UEC, okay, which they do business with. So what happened is that if you look at the next chart that I'm going to show you, if you look at their major supplier, right, that means, right, Union Gas is in what they do is they sell all those liquefied gas container where you go to those coffee shop, right, they usually buy the big LPG tank, right, liquefied petroleum gas, right, to put inside the hawker, and when they on the gas and they cook. So all these are what provided by Union Gas itself. But if you look at Union Gas, right, their major supplier, that means the Lisco company is a distributor itself. So basically what they do is they buy the gas and they sell it to retail. Okay, so they are a distributor. So who they buy that thing from? So basically they buy from a few sources, which is the Pavilion Gas, SPC, and Sebas, which you can see from here. And you look at Sebas, right, bracket 2. So you look at bracket 2. Bracket 2 say Mr. Teo Kian Ang and Alice Teo hold 61.89% and 5.38% interest in UEC. You remember just now I showed you about UEC? Okay, so just now I showed you about UEC, right? UEC is the interested party transaction part that I show you. Okay, so basically what I'm trying to tell you is that more than 50%, right, of their cost of goods sold, that means they buy the cost of goods and they sell it off. So more than 50% of the cost of good, right, is actually bought from their own company that the founder itself also own. Okay, so this type of interested party transaction, I'm very careful because this one can subject to manipulation. Okay, so just take note about it. So So you can see that from this part, right, under the agreement, right, in the IPO Prospectus, it says that the Union Gas, right, for the first year, right, they got a dealership agreement, right, with the UEC group to buy these all these LPG tank, right, at a fixed price. And that's only for 2017. So this company IPO in 2017. For the whole 2017, they got a fixed price. And of course, in the next year, which is this year, 2018, right, you can see from here, UEC group premium may increase by up to 20% over the preceding year as UEC group premium. Okay, so basically, right now maybe they are enjoying very low cost. When they IPO, right, they're enjoying very low cost cost of goods sold. So that means their gross profit margin may be higher. And maybe after 1 year, they're going to charge them a higher cost of goods sold. So their gross profit margin may reduce. So this is one thing that you must take note and have concern over it. Okay? Are you clear on that? Okay, so once you know about the business, the management, the next thing you want to find out is the financial. Okay, so what you want to look at in the financial is there's a few places that you can look at, but first you want to look at the find out information like extraordinary item. You want to find out information like the management discussion on financials. Okay, you want to know what is happening about the business, so you want to look at their financial and see. Okay, so if you go to the Protnets table of content, they show you that there's a summary, selected combined financial information. So basically this one is the summary of the whole business. Okay, if you have time, you should read the full one, which is over here. Where is it? Okay, the full financial is on page 21. It's over here, this one, the full financial. Okay, the detailed financial, which comes with the notes if you have time. Okay, if you don't have enough time, you can just read the this one. Okay, the selected combined financial information, okay, which is more than enough Kennedy. Okay, so you don't need to read so in depth about it. So let's say I go to the more in depth one. I go to the 218. So the index as well. So basically, when I come to this balance sheet itself, I want to find out, right, whether how much cash and how much debt the company has. So if you look at Protnets, right, before the IPO, they have about 27.7 million cash. And if you look at their debt, right, they do not have any debt. So zero debt. So net cash, zero debt. Okay, so good. So I know that this company financially is strong. Okay, so that's the reason why when they IPO, they never IPO the money to pay off the debt, because there's no debt in them. Okay, then next is you want to look at the financial statements. Okay, which is the income statement. Sorry, you want to find out for all those one-off item. So you can look at Protnets, right? You can see their revenue is 361.3 million and their profit is 16.2 million. Can you see that there's a big jump between 7 million to 16 million and 245 million to 361 million? Can you see a big jump over there? So for you as an investor, you must find out why the company big jump. Okay, you must understand when a company they want to go IPO, right, they will make sure that their financial numbers are very good, their profit keep growing. Okay, and then they can IPO and get a very good valuation. So you know sometimes their revenues or net profit may be make up one. So you must find out why the thing jump. Okay, what's the information? So you must go find out. But first you need to minus off the one-off item. So if I look at the business itself, right, this thing called other income, you want to find out whether it is the one-off profit or not. Okay, so already you scroll down to the notes, right, which I already found it is over here. So you say notes 15, the other income. So all this other income, right, is not their main business one. Okay, it's just their main business is brokerage business. So all these are not their main business income. So when you do the financial over here, right, if you do the financial over here, right, you have to take 16.3 million, round it up, minus off 2.8 million, and that is your real profit that you are paying for Protnets. So take note about it. Okay. So next is we want to find out why the revenue jumped from 2016 to 2017. So where can you find this information is usually go to this place called management discussion on financial statement. So which you can find it from here. Can you see that? Management discussion and analysis of results of operation and financial position. So page 55, you have to go to that page and find out. Okay. So it's right over here. So let's say if I were to scroll all the way down, I already found the page already, so I just go direct to it. So I think it's page 63. You can see from here, revenue increased by approximately 47.4% from 245 million to 361.2 million. Okay, and due to what reason? You can see that commission income from agency services increased by 43.17 million, so or 21.9%. So this commission income from agency services, right, is basically the transaction between the resale market. Okay, and this commission income from project marketing services, right, is the transaction commission coming from the property showroom, property launches. Okay, and if you look at their main generating, right, is actually the property launches. You see the property launches increased by 72.2 million, which is 167.7%. So 167.7% increase in their property launches revenue. Okay, so this one you must find out why they are able to get so high jump, and is this launches commission continue to keep jumping or not. Okay, from here you can see it's due to high percentage of sales commission given by property developer, approximately 1.7% in 2016 and 2.3% in 2017. So basically the commission that the property developer give the agent, right, almost double up. Okay, through all those new launch project. Okay, so let me explain to you this, because I went out to the market and dig information from the property agent. So sometimes when you read from here, you also need to go and dig for information. So this is the two information that I already taught you where to get it. Okay, so if you look at Protnets, right, like I said, the other income is not their business. So you must take the 16.3 million minus off the 2.8 million. So their profit, exclude the one-off item, is actually 13.5 million. So just take note about it. Okay. So next is, like I told you, that the project marketing service actually went up by 167. Is it sustainable or not? Okay. So from the article that from the IPO article that I write about Protnets, I also got written about this thing. So what I say is that 2017, right, may be an exceptional year for Protnets. Why? Because in early 2016, right, Singapore is facing a very challenging, Singapore property market is facing a very challenging period. Okay, so a lot of property developer cannot sell their units, so they got a lot of unsold unit. So in order to unload all this unit, because if they don't sell, they got penalty. So in order to unload all this unit, right, the usual developer commission is actually 1 to 2% for agency. Okay, but because they want to entice the agent to help them faster sell it off, right, they increase to 3 to 4%. So at that point of time, right, what happened is that Protnets, right, they are the early mover of this thing. They saw this thing happen. They told all the agents, just go and do all the property launches. So they focus a lot on the property launches. And when they focus, right, just right in the second half, right, 2016, right, and 2017, right, the market picked back up because of the en bloc sales. Because a lot of property get en bloc, and all these en bloc owner, they have to go buy new properties to stay in, or they want to buy sales, or they got a large cash, they want to buy new property to invest. So in the end, when the property market pick up, right, Protnets already at that position, so they ride the property market up. That's why at that point of time, right, they make 167.7% increase in that sales. So to me is that this amount, right, may not happen again. Okay, but of course, all these, like I say, all these en bloc people, right, they need to buy new house, right? If they only got one house, they need to buy new house. So 2018 and 2019 is going to be a resale market for the Protnets itself. So I won't expect Protnets to continue to grow like 50% or 40+% in terms of revenue next year, but I think that they probably can maintain that same amount. Okay, or maybe they will slightly drop because of the recent cooling measure. So take note about it. Okay. Of course, like I also tell you that they have net cash with zero debt. So these are some of the information that we find out. Okay. Okay, so this is the financial statement of the Union Gas that we're going to talk about. Okay, so you look at Union Gas, right? When they IPO in 2017, right, they only give you the figure 2014, 2015, 2016. So can you see that their revenue is decreasing from 44 million to 35 million to 35 million, and yet you look at their gross profit is increasing. Then you think about it, how can the revenue keep decreasing, but the gross profit keep increasing? That means the cost of good that they bought, right, from the supplier, right, is becoming cheaper and cheaper. So then again, who's the supplier to them? Like I talked to you just now, the interested party transaction, right? The interested person transaction, their supplier more than 50% is their own company that owns, which is a private company, owns their founder. So in order to IPO, the founder may have lower or have a fixed cost to the fixed agreement with the LISCO, which is the union gas, and sell them at cheap rate. After that, when they IPO, probably they're going to increase back the price, which is what they explain out there. So maybe, right, moving forward, right, the earnings that you're paying now, right, which is 2.3, 2.9, 3.9, 3.9 million, right, may not be sustainable. That means you may be paying a higher PE for this company. Am I clear on that? Okay. Do you understand what I'm talking about? If you understand what I'm talking about, I want you to type yes in the chat box right now. Okay, cool. Okay, so you understand. So you must be very careful of when you invest in IPO. You have to check all this information. You must know a lot of people, they IPO just to cash out only. Okay. Okay. So after you finish your financial, the next thing is the valuation itself. Okay. So if you look at the valuation, like I took off the one-off earnings, right? Protnex will exclude the one-off earnings about 13.5 million, and the IPO about 240.5 million. And in the prospectus, they say that you are paying 12.3 times PE, which looks very decent, fair value. But actual fact, if you minus off the one-off, right, you're actually paying a 17.8 times PE. But of course, like I said, that the growth in the new launch project, right, that one may not be sustainable. So maybe you are paying at a higher PE. You don't know that yet also. So just take note. So if I look at this, right, I may not invest in Protnex IPO at that point of time, okay, because there's too much risk in there, and I'll probably wait for a good price at the point of time. Okay. Next is industry report, which you can find it from here. Let me show you also. Just get out from here. Okay, industry report. So basically, you go back to the table of content. You scroll all the way down, usually at the appendix. Can you see appendix? Independent market research report. So F1. So you must go to that one. So basically so you can see here, this is the independent report that they did for the real estate agency. Okay, so these are the reports that you must read. Okay, but of course take with pinch of salt for some of the projections. So what I usually do is I want to find out who's their competitor and how strong Protnex is inside the market. Okay, so from this report you can find out this thing. You can find out their industrial landscape, which is, you know, that their competitor Protnex is number one, which is Protnex Realty. The second is ERA. ERA is owned by this listed company called APEC Realty. So APEC Realty owns ERA. So the top two property agency in Singapore is listed on the exchange. Okay, so if I want to compare them, I'll compare it with APEC Realty, which is the second largest. So between these two companies. Okay, so but of course doesn't mean that the company is the largest is good. You also must look for efficiency. Okay, so this is another thing that is not shown in the prospectus, but you have to go dig it yourself. Okay, so this is a report that I wrote. Also, biggest may not be the best. Okay, so basically if you look at the Protnex, right, their brokerage income in 2017 is 355.8 million, and APEC Realty, right, their brokerage income is 391.2 million, and Protnex got 6,684 million agent. APEC got 6,684,000 agent. APEC got 5,882 agent. So if you compare brokerage income per agent, right, actually, right, APEC Realty, right, per agent income, right, is 66,508 dollars. Okay, and if you look at Protnex, it's $53,232. So you can see that even though Protnex is bigger, right, but they are not as efficient as APEC Realty. So doesn't mean they are the biggest, they are the better players. So this one thing I want to let you know. Okay, so for me, is by looking at this, right, I think APEC Realty are generally more efficient. That means every of their agents are producing higher income as compared to Protnex. So APEC Realty may be a good look at, of course, Portnet also is a good look at. So there's only 2 players that you can look at. Okay. So with that, I've come to the end of my presentation for how do you look at what information you look. So now I'm going to move on to the Q&A. Okay. So if you have any question, right, I want you to type in the chat box right now, so we can talk about I can answer your question. So I'm going to change it to my face now. Okay. So can you see me now? Type yes if you can see me right now. Okay, cool. So now we're going to now it's about what time? Let me take a look. Now it's about, let me give it a minute. Now it's about, oh, I didn't know I'm supposed to present half an hour, but I present an hour. Okay, so I'm going to go for a quick Q&A, or if you guys mind if we overrun the webinar? Okay, because usually the webinar is only 1 hour, but if you okay to overrun the webinar, you just type yes, then I'll stay. If not, I'm going to answer a quick question. Okay, cool. Okay, no problem. Okay, thank you so much. I didn't know I take so long to share this presentation. I hope you have benefit from it. Okay, so right now I'm going to start answering your questions. So please type in the chat box right now your questions. So let me answer a few questions that I look at right now. Okay, let me see what questions you guys have. Okay. Sui Hui asks, is it possible to get back to that slides later? I think there's a replay video. If not, you just Google 5% hangout. This video going to put up on the online, so you can go and repeat the video from there. Okay, Alfred asks, hi Victor, how does one able to make a buy or not judgment call given that some potential company filing for IPO without any track record or its performance? Okay, my take is, right, most of the time, right, I don't buy into IPO company, because when a company transit from an IPO company, right, from a private company to a listed company, right, some of the management still treat the listed company as their own company, okay, and they are not fair to shareholder. So that's why I don't really buy into IPO company. I always keep tracking it, okay. But of course, there's some good companies like Facebook, where you already hear news about the founders are very down to earth and all this before the IPO, and when they IPO, and the company's growth prospect is a lot, it seems cheap, and you may want to buy. So when you want to buy the IPO companies, right, please don't invest a huge amount of money. Just probably maybe a 1-2% of a portfolio, that's all only. Okay, because most of the time IPO companies, right, I would say 9 of the IPO companies, out of 10 IPO companies, right, 9 of them, right, after the IPO they will go down, okay, but only 1 out of the 10, right, will go up, like Facebook or maybe Tencent and all this. After the IPO, they just keep going up. So there's only 1 out of the 10 that usually are good companies. Okay. Let me see what's the next question. Okay, so Alfred asks, how are the prospectus from Singapore companies planning for IPO differ from the company's IPO in different country exchange, example Hong Kong? Okay, actually, honestly, I haven't looked at any Hong Kong IPO before, so I cannot share with you any information about that. So sorry about that. How to find out about Ivan asked, how to find out about the powerful negotiator contribution beside from the prospectus? Okay, so how do I actually find that information? Is basically I have a friend who is an agent inside powerful negotiator, and I know they always frequently share their slides and their commission inside the slide, so I get the slides from them. Okay, so you always have to ask or find out information that's outside of the prospectus. So this is what I do. Okay, basically I ask my friend who's an agent in powerful negotiator, he passed me the slides and I sort the information and I tabulate out for you guys. Okay. Andrew asks, hi Victor, how do you find out that Pronex have a group called Powerful Negotiator together with the revenue contribution? So like I said, I asked my friend. My friend is inside Powerful Negotiator, and he says it's the largest group, and the slides that I got from him is the revenue contribution. Okay, so you always have to think outside of the box and find more information from that. CH Choi asks, how is APAC Realty compared to Pronex? Personally, I haven't analyzed APEC very in depth. Okay, Prognes I only look at the IPO prospectus. But in terms of efficiency, just now where I show you, right, it seems that the APEC Realties are quite efficient. So I think these two APEC Realty and Prognes are generally quite attractive companies, especially with the cooling measure that will definitely affect their share price moving forward and their earnings. I'm looking for the right opportunity that I look at them back again, because they are generally service-based business, asset light, so they won't go bust during the downtime, and for them to turn around is very easy. Okay. Lian Sen asks, what is the best way to buy IPO shares? Usually you buy IPO shares through the ATM. You're going to subscribe the you want to go to ballot for the shares. You may get or may not get, but my take is, if you are very new to investing, try not to go to IPO shares, because most of the time not a lot of people can make money from IPO shares. Joanne asks, how do you calculate the intrinsic value of Prognet shares? I think that for property counters, I think you use price to book ratio. That's the best really, to value all of them. And you also want to, if you want to use earnings, also can, the PE itself, but you must find what's, because Prognet only IPO recently. If they IPO for 10 years, right, you can find out the 10 years are up and down cycle, how much are they trading. At least you know every year they got a minimum how much. Okay, but right now you don't have the figure. I think price to book will be a better one. Okay, keep your question coming. What is the lock-in period for IPO stocks? So no. When you buy IPO stocks, there's no lock-in period for you. Okay, Sally asked what's the lock-in period. There's no lock-in period for you when you buy into IPO stocks. There's only lock-in period for those founders or management that IPO their shares. Except for the vendor shares, there's no lock-in period. Other than that, the shares when they IPO, they have to lock in for 6 months to 1 year. Kelvin asked, how do you find the IPO prospectus for Malaysia? Personally, I haven't looked at IPO prospectus in Malaysia, so I do not know where. If I have the information, I'll share with you next time. Bumping asks, this session is recorded. Will you be uploaded? Will you be uploaded up to the website? Yes. Okay. So now I'm going to teach you how do you look, where can you find the information? Give me a minute. Okay, I'm going to go back to the slides. I'll go back to my computer. Can you see my computer here? If you can see, please type yes in the chat box. Can you see the Google? Okay, cool. Okay. So basically, if you miss this session, or you want to go through this session, right? You just go to fifth person, just type fifth person, then you just type hangout. Okay, can you see? Fifth person hangout live show. So basically, those sessions that you miss, right, is all over here. Okay. So these are the past session that we have done for the past few months. It's all over here. Okay, so we have about 14 sessions, 14 episodes already. So this one is the 15th episode. The last episode was Rusmin talking about, does long-term investing still works? Okay, so these are the places that you can get. Okay, so now I'm going to go back to my face again. Okay, so let me see. Wei Ping asked, should we look at dividend policy at IPO? I would say no. I'm very concerned with when I look. Okay, you can look at dividend policy. Okay, if I look at the company IPO and they pay out 100% of their earnings, they plan to pay 100% of earnings, more or less, this company IPO to cash out only. Okay, how can you pay out 100% and not grow? People when they IPO, they want to grow. So that's what I think about it. Okay. Okay, let me see. Nash Mooner actually asked, do you think that their profit margin is low compared to their revenue? I don't think their profit margin are low. You must look at industry basis. So if you want to compare profit margin, you have to compare their profit margin with APEC Realty's profit margin. That's the better part. Okay. Okay, let me see. Okay, Javier asks, thank you for sharing, but we have no chart to rely on for TA, so we are buying IPO based on FA. Okay, personally, I'm not a technical analysis person. I'm a very fundamental person, so I can't advise on the technical analysis on that part. Xiang Chao asks is what P ratio should we target for? Personally, we don't know how the market going to trade the prop or how they're going to value this agency business yet. So for me is I will continue to monitor until I know how much the market are willing to pay for them first before I move in. Okay. Tian Leong asks, which are the most vital financial ratios that I should look at when assessing the company? If you are talking about the IPO company, is the revenue, the net profit margins, the cash position, and the debt. So these are the some few ratios that you can look at. Okay. Malai asks, how do you tell if the offering price is fair value? So it really depends on the growth. If the company do not have like a growth, let's say company is Facebook, the PE was 100 times. It looks overvalued, but the growth prospect is very big. So it may seem cheap. Okay. But for Protnets, I think they IPO at 17 times, which is excluding the one-off item. I think generally they are slightly above fair value. I think such companies should trade about 15 or less, but definitely above 10 times one. Okay. Someone asked, is the IPO for REITs the same link on MAS Opera? I think it is. It is. Okay, MAS Opera. As long as you need to lodge for IPO, you have to lodge into MAS. Okay. Okay. Roy asked, some buy into IPO then sell off. How I should hold if I believe in their business? Okay. So most of the time I don't buy into IPOs because their valuation very high. I only very selective on IPO, but so far I haven't select any one of them. Okay. But the method you are talking about is buy IPO and sell off later, right? Yes, some people do that, but so far I haven't seen anybody become a millionaire just by buying IPO and sell off later. Okay, so because everybody also know how to do that, right? So just take note about it. Okay, I don't believe in that method actually. Let me see. Kai-in asked, hi Victor, is it common for IPO to hold off dividend payout for the first few years? I think they must at least pay out some lah. If they, unless they are really want to grow their company, they are really growing their company fast, then okay, they can hold their payouts. Okay, but I feel at least they pay some will be good lah. Okay, but I think it's common lah for IPO companies, if they don't want to pay out dividends, they want to grow, then that's still okay. Okay, but of course you must track the management. So for this kind of company, I rather I track them first. You don't immediately buy into them, you track them. Okay. Kai-Ying actually asked that, hi Victor, you mentioned that a company share price goes down after IPO most of the time. Okay, I would say maybe 8 or 9 out of the 10 times. How long does it usually take for them to stabilize and possibly start going up? Actually, it depends. If they IPO at a very high valuation, right, it may take them a very, very long time. Okay, so for instance, let's say SATS, Singapore Airport Terminal Service, right? This company, when they IPO, right, I think after the IPO, they drop all the way down. It takes them about, I think, 10 years to go back to the IPO price. Okay, so that's why I say the valuation is very important for IPO, and the business and the growth prospect. Okay, the growth prospect is the most important one, because if the company don't grow, right, you pay at a high price, right, eventually it will take you a very, very long time, like SATS, right, take you 10 years to grow the company, take you 10 years to go back your break-even price. Okay. Paige actually asked, how can we ballot for other country IPO? Are Singaporean allowed to do so? I'm not sure about that because I don't go for overseas IPO, so I'm not so sure about that. So sorry. John asks, for an IPO, what is the range of P multiples that shows that is a fair price? Okay, like I say, I cannot tell you a range because it depends on the growth prospect and the business model itself. So if you look at IPO, so you look at Facebook, the IPO I think at 100 PE, right? But if you had bought at 100 PE, now you have went up 5 times from the IPO price. Okay, so it's very subjective. It's based on the business and the growth prospect. How long is the runway of the business growth? That's the important thing. If the business growth long runway is very long, then even though they are very high PE, right, you still can make a lot of money from that. So be very careful in looking at the growth prospects. Okay. Serene asks, what's the formula you use to find out if the owner are cashing out of the vendor share? So like I show you already, out of the total proceed, how much the proceed is going to them. So if you look at Protnest, right, out of the 60 million profit, right, proceed, right, 36% is vendor shares. So not so bad. But if you look at Union Gas, right, out of the 15 million proceed, right, 7.5 million, which is 50%, is going to the vendor shares. Okay, and the 7.5 million, right, that they go into vendor share accounts about 15% of the market cap. Whereas if you go to Protnest, right, the vendor shares accounts about, let me go back to my slides, give me a minute. The Protnest, the vendor shares accounts about 6.2% of the total market cap. Okay, so this is how you should look at. So it may seem that Union Gas is cashing out more than the Protnest. Okay. Ivan asks, so are you not suggesting us to buy into IPO share? You can still buy into IPO share. It's just that, let's say if I was given a chance to buy the IPO shares of Facebook, definitely I'll buy Facebook. Okay, because the growth prospect is very strong, the business itself is very strong. So it's your gauge of the business and the growth prospect of the company. Okay, and of course when you buy into IPO share, you make sure that it's only 1 to 2% maximum of your total portfolio. You don't bet too much, like 10% or 20% or 50%. That is too much risk. Okay. Is there a Wong asks, actually, is there a regulatory requirement as to how much the owner can pocket from the proceed from the launch? No, there's no regulatory so far. I don't know. Oh, okay. Edmund just shared where can you get the IPO offering for Bursa Malaysia. So I think you basically just type bursamalaysia.com. Then you type Bursa Malaysia and you type IPO summary. Then you will get the page itself already. Okay. Okay, I'm going to maybe choose the another 2 or 3 questions to answer. Good one. Then I'll call it a day. Okay. Let me see. Uh, Okay, Han Chen asks, do we avoid IPO stocks if you are investing for dividend? Yes, if you're investing for dividend only, don't buy into IPO stocks. If you invest for dividend, right, you make sure that the company already listed in the exchange for at least 5 years. Okay, so take note about it. Let me see. Okay. So I won't say that. So the take-home message is not to buy into IPO share. No, you still can buy into IPO share, but you must be very, very selective on the IPO share. So like I said, if you given me a chance few years back when Facebook IPO, I'll definitely buy Facebook shares. Okay, but of course this is on the hindsight. Okay, but because last time I always look at the tech companies and I just don't invest in them because I feel they are very high. But nowadays I start to get an understanding of how the tech company works. Okay, let me see. Okay, got one IPO type of company I should avoid. Those company that IPO, right, but they are loss making one. So this type of IPO company usually I avoid one. Okay, so like Facebook, when they IPO, they are making money, so not so bad. Okay, if you're going to buy into companies like Snapchat when they IPO, wow, the share price go all the way down. Definitely you lose money. Okay. Okay. If you have some question, okay, I'll just answer one last question. Can some of you just type any question you want? I'll just answer the last question. Okay. Okay, I found one. Okay. So Tan actually asked, if an IPO proceeds are used for debt repayment and growth, what would be a good judgment? 50-50, 30-70? As long as they use for growth and debt repayment, I still think it's okay. Okay. But what I don't want to look at is like, okay, try to look for growth as majority or maybe 50-50. If you show me debt repayment is majority, right, then probably I'm concerned about it. Okay, but I'll get even more concerned if debt repayment is like 100%. So just think about it. Okay. Okay. So with that, now it's about 10:20. So today's webinar is a bit long, 1 hour and 20 minutes. So thank you so much for attending this webinar, and I hope you have learned a lot from what I've shared with you today. And I'll see you next month. Okay, next month we're going to have a very interesting topic if we are able to think it out. So I'll see you next month. So thank you so much. Good night, and I'll see you next month.